This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
September surprise, a strong showing for stocks as the halfway mark is hit in a month that's historically tricky for investors. But with the Fed meeting, debt ceiling, Syria, and budget fight looming, will fortunes change?
Social climbers, as Twitter gets ready to sell shares to the public. What's behind Wall Street's recent love affair with social media stocks?
And Christmas in September. Stores are already out with holiday promotions. But will the early bird shopping discounts frustrate consumers and backfire on retailers? All that and more on Nightly Business Report for Friday, September 13th.
Good evening, everyone. On this Friday, the 13th, investors weren't superstitious about buying stocks. In fact, it was just the opposite. The major averages were all up. The Dow wrapped up its best week since January, and the S&P 500 posted its biggest weekly gain in 2 months. Now, September is historically the worst month of the year for stocks, but not this time. Looking at the scorecard at this halfway point for the month, the Dow and S&P are up by 3% or more. But that could change depending on the outcome of some crucial decisions in Washington over the next few weeks. First, there's the Federal Reserve meeting next week, and policymakers could decide to trim back on the Fed's massive stimulus program. Then there's the issue over how to fund the U.S. government and the debate on the debt ceiling. And what the White House finally decides to do about Syria, another biggie. But today, the mood on Wall Street was upbeat. The Dow rose 75 points, the Nasdaq up 6, and the S&P 500 added 4 points. In the commodities market, the price of gold fell another $22 an ounce, losing more than 5% this week to close just above $1,300.
Well, those rising markets Susie just mentioned, not just this month, but all year, really, certainly figured in Twitter's tweeted announcement yesterday that it has submitted a confidential filing to begin selling shares to the general public. But social media stock offerings, like those in other industries, haven't all been winners. In fact, some have been anything but. Seema Modi looked at the numbers for us.
Tweeting, yelping, tagging. Social networking is certainly hot right now. But is it a smart investment? With Twitter announcing yesterday via Twitter that it had filed for an IPO, Wall Street is already drawing parallels between that company and other recent social media IPOs, many of which had rough starts. 4 months after Facebook listed on the public market, the stock had lost half its value. Analysts were skeptical of CEO Mark Zuckerberg's ability to make money off mobile devices. Similar story for Pandora, the internet radio site. Shares tumbled more than 18% in its first 3 months of trading due to a slew of downgrades and disappointing earnings. Groupon had a great listing, soaring on its first day as a public company. But then, the coupon site lost a staggering 86% in just 1 year. So what went wrong? One concern was Groupon's entire business model, which some analysts said had a low barrier to entry. But that was then, and this is now. Facebook, Pandora, Groupon, all up double digits over the past 3 months, thanks to more users, a streamlined focus on mobile, positive commentary from Wall Street, and Silicon Valley.
I think that with Facebook recovering, proving that mobile can generate revenues, it makes sense for me that they go out now and take advantage of this positive market.
And the street's growing appreciation for how broad social platforms can generate meaningful revenues could potentially help Twitter when it trades on the public market. But investors are paying close attention to how Twitter's IPO will be handled by Goldman Sachs.
For me, that's the question. What will Goldman Sachs do that Morgan Stanley screwed up in terms of the way they priced the IPO that essentially got Facebook to underperform for a while.
But there is one advantage that Twitter has: time. It may be a younger company, but Twitter has been able to learn from the trials and tribulations other social media companies have already had to face. For Nightly Business Report, I'm Seema Modi.
Well, we could have turned to Twitter to see if individuals are really interested in buying the stock, but that's so last year. So instead, we hit the streets the old-fashioned way with cameras.
I would absolutely invest in Twitter. I mean, They have such a broad reach. I mean, there's so many people that are tweeting all the time, and I mean, it has such a large market penetration.
I think it's a trend up, and I only see a bright future for it. So, yeah, I would.
I think you should invest in Instagram instead. It's going to be a more profitable thing to invest in, I think.
Our guest tonight is also bullish on Twitter. Kevin Landis already owns shares of Twitter. It's through a closed-end venture capital fund. He's founder and chief investment officer at First Hand Capital Management. Kevin, nice to have you on the program. We know, as we said, that you already own the stock, but for people who don't, we know what hype does to a stock. We saw that with Facebook. So if somebody wants to own Twitter, do you think that they should get it right on the day of the open, or wait a little bit until it's been around for a while?
Well, I guess for any investment, it depends a great deal on the price. So it's a quality company, and it's likely to be, in our view, it's an emerging blue chip and a great growth story. But there is no investment, no matter how wonderful, that can't be overpriced. So you really have to take a look at the numbers once they're out, run the numbers, and see what you're paying for that.
You know, Kevin, one thing that I think of when I think of initial public offerings is that the people who are selling their stock, they all make money. The investment bankers make money. But whether you, the individual investor, will make money or not is kind of anybody's guess. As a general proposition, do you think it's wise for people to go into IPOs or buy, because it's very hard to get those IPOs, to buy immediately after on the open market?
Well, you're looking at somebody, or you're talking to someone who did not buy Google on the IPO and has regretted it ever since, right? That would have been a great investment. So there are some cases when you absolutely should. I guess the thing to look at is the IPO day is the first of many days that stock will be publicly tradable. And so while there's no reason that you can't buy it that day, there's no reason you can't buy it the day after as well.
What about other social media stocks? You heard Asima's report. Some of them have really taken off since their IPO, whether you look at LinkedIn, Yelp, even Facebook. Is it time to take profits in these stocks, or is there still more to be made?
Well, you know, if you look out at the tech landscape, it's really sort of a tale of two groups of stocks. The old guard has been around for so long that they really struggle to show any growth at all. I'm talking about Oracle or Intel or Cisco. And they trade like it, and they don't have a lot of upside to them. So the few growth stocks that are out there, and it is very few because it's so hard to go public ever since Dodd-Frank, the people will pay really high multiples when they see growth. So if you look at Salesforce.com, or if you look at LinkedIn, or you look at any of these others, they're really expensive. And there's kind of this gulf in between where reasonable growth plays just aren't that common.
You own some of the shares through a venture capital fund. What do we really know about how much money Twitter makes and whether they are growing their profits at a nice pace? What do we know?
We don't know much, and that makes it much tougher. And that's frankly why the venture capital investing game is so much tougher. You have much more limited information, and everything is a chore. The research is much more of a chore. Just getting your hands on shares is much more of a chore. But you know, that's what makes that game much more rewarding, I suppose.
All right, lots of good information. Thanks a lot, Kevin. Have a great weekend. Kevin Landis, Chief Investment Officer at First Hand Capital Management.
Well, Susie, President Obama is losing his chief economic advisor. Gene Sperling, head of the president's National Economic Council for the past 3 years, is stepping down January 1st. Sperling, a longtime Democratic policy pro who worked in the Clinton White House, will be replaced by a top Oval Office aide, Jeffrey Zients, who had filled in as the acting White House budget director.
J.P. Morgan Chase is facing a multitude of legal and regulatory investigations, so many, in fact, that it needs to beef up oversight of itself. The nation's biggest bank said today it plans to spend an additional $4 billion and commit 5,000 extra employees just this year to help clear up compliance issues.
Thousands of Colorado residents are being evacuated from their homes after 15 inches of rain fell in just 3 days. turning mountain streams and creeks into raging rivers of water. 90 miles of Interstate 25 have been shut down to drivers. Rocky Mountain National Park closed to visitors, and so far, at least 3 deaths have been attributed to the flooding. Colorado's governor signed a disaster declaration for several counties, and President Obama approved federal aid for flood-ravaged areas.
A devastating fire on the Jersey Shore, wiping out dozens of businesses and a popular boardwalk that was just rebuilt less than a year after being wiped out by Superstorm Sandy. Scott Cohn joins us now from Seaside Park, New Jersey. Scott, over to you.
Susie, they were so close to a comeback, or at least they believe, both emotionally and economically following Hurricane Sandy. They had limped through this season, but they made it. But now tonight, Seaside Park, New Jersey stands as the very definition of a cruel twist of fate.
It was more like a forest fire than a building fire, whipped by 30-mile-per-hour winds, hopping from rooftop to rooftop like they were treetops, destroying everything in its path. They fought it like a forest fire, too, twice cutting giant trenches through the wooden boardwalk to keep the fire from spreading. A boardwalk only just rebuilt for around $20 million after Hurricane Sandy.
You know, I really feel like I'm going to throw up. I mean, just, you know, how much more are people going to be expected to take? 2, 1.
They only just reopened this boardwalk Memorial Day weekend, and business was only a fraction of a normal summer. The hope was they could eke out a little more in September and October.
We fought broken equipment all summer and what we lost from the storm, and business was down 2/3. And just getting up and running again, June 1st, first day, and now this.
Horrible deja vu for Angie Lombardi, whose 2 amusement booths on the boardwalk, flooded by the storm, are now gutted by the fire.
It's just like, here's something else.
The fire is believed to have started underneath an ice cream shop that was closed for the season. The family that owned the chain for nearly a century said, "Our hearts are broken." In all, at least 30 businesses are gone. It could be weeks before there's a dollar figure.
We have an obligation now to get aggressive and rebuild, and I will not permit all the work that we've done over the last 10 months to be diminished or destroyed by what happened last night.
But even as they struggle again to get back on their feet, investigators are considering the possibility that this disaster wasn't an accident.
Investigators felt it was real important that they maybe get video of the immediate area just prior to the fire.
It's far too early to know if the fire is suspicious. Also too early to know if a region that proclaimed itself stronger than the storm is stronger than this.
It could have been a lot worse. There's some solace in that. If they hadn't cut those trenches on the north end of the boardwalk, the fire could have spread north into Seaside Heights. As it is, the Seaside Heights boardwalk is open, and a festival for this weekend is scheduled to go on. Today's event's canceled, but the next 2 nights, they'll try and eke something out after a very difficult end of the summer. Susie?
You know, Scott, after Sandy, there was federal money there to help those folks rebuild down there. Is there anything like that available this time, or are they really going to have to depend on private insurance?
No, there really isn't anything like that, and it is about insurance. And one of the things that the state tried to do as a result of that is they had their insurance authorities, the state insurance commissioner down here, to try and get payments to these business owners as quickly as possible. Fortunately, in a lot of ways, it is only commercial structures, but of course, that's the lifeblood of the economy here.
All right, Scott Cohn reporting for us tonight. Thank you very much, Scott Cohn.
And coming up on the program, how badly do airline passengers want fast Wi-Fi in the sky? You might be surprised at what flyers are willing to give up. But first, here's a check on how the international markets closed today.
Dozens of JetBlue flights were delayed this morning because of a computer failure. At least 40 flights were held up for as much as an hour and a half. The airline blamed a connectivity issue that prevented it from releasing planes from their gates at several airports. Now, the system was restored by 10:30 a.m., but the delays lasted all day long.
Air travelers are willing to put up with a lot of inconveniences, including flight delays and rising airfares. But one feature is increasingly becoming a must-have on flights: reliable online access in the air. This week, Jane Wells took a look at what some airlines are doing to supply better Wi-Fi in the sky.
People want to get online at 30,000 feet, and airlines want to make money off that.
It's very similar to not having water on a plane. You know, if you don't have bandwidth or you don't have connectivity, it kind of feels like not having water, and passengers expect it.
A survey by Honeywell found that 90% of U.S. airline passengers think Wi-Fi should be available on every flight. 13% would be willing to give up in-flight toilet privileges in exchange for faster service. But few people actually pay for it, often feeling the price is too high for a service that can be slow or spotty. That is about to change. Virgin America and JetBlue are two examples.
Here at the Airline Passenger Experience Association Expo in California, GoGo is announcing a new system that is going to roll out starting next year on Virgin America, which will, for the first time on commercial airplanes, combine GoGo's ground-based towers with satellite space it is renting. Information you send will go down to the ground. Information you receive will come from above.
This solution will be 20 times faster than what most of our planes do today, so it's a quantum leap here.
JetBlue, meanwhile, is finally going to provide onboard internet next year using high-capacity satellites owned by Viasat, providing enough bandwidth that passengers can stream movies from Netflix. All of this is a huge investment, but Piper Jaffray calls in-flight entertainment and connectivity a $3 billion market growing 20% a year. There is so much demand, and with satellites so much capacity, commanding the online skies has become a new age aerial dogfight.
You can see what the natural demand is. Land the plane, as soon as you hear that ding, 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 what's the first thing everyone does? They reach in their pocket, they pull out their device. So we're trying to take that natural demand and make it available in the air at 30,000 feet.
For Nightly Business Report, Jane Wells, Anaheim, California.
Intel was the best performing Dow stock today, and that is where we begin tonight's market focus. Jefferies upgrading the chip maker to buy from hold as Intel focuses on making higher performance and cheaper microprocessors than its competitors. The analyst also raised his price target on Intel to $30 from $27, and shares were up more than 3% to finish the day at $23.44. Shares of Ulta Salon rising sharply today. The beauty products retailer reported a 28% rise in earnings and improved revenue. The chain, which sells makeup, perfume, and skincare products, has reported double-digit profit growth for several years as the company opens new stores. The stock soared 17% to $117.53.
United Natural Foods also having a strong day. This specialty food distributor reporting double-digit revenue growth amid strong demand for organic foods. The company also boosted its sales guidance for the full year. The stock gained 13% to $67.73. And Viro Pharma has reportedly hired Goldman Sachs to explore a possible sale. According to reports, Sanofi and Shire are said to be interested in the rare disease drug maker. Viro Pharma is trading at its highest level since 2001, $39.13. Today, it soared 28%.
Our Market Monitor guest this week expects stocks to do well this September. They have so far, even though there could be some bumps along the way. She's Cecilia Gondor, Chief Investment Officer at Thomas J. Hirschfeld Advisors. Cecilia, welcome. Good to have you with us. As we reported there at the top of the show, the first half of September has been doggone good in a month that often isn't. But there are a lot of things looming here over the next couple of weeks in Washington that could derail it. Do you think stocks will continue to make significant headway for the rest of this month and the rest of this year?
What we've been seeing is that there's been the same factor that's influencing the interest in stocks is what was hurting the interest in bond over the last couple of months. Since the Fed started hinting that it might be tapering its monthly bond buying program, investors have been worried about interest rates rising, and they've been selling bonds, all types of bonds, all kinds of fixed income. And there's a lot of money that's sitting on the sidelines looking for some place to go. I think that's starting to get into the equity markets, and that's going to help through the rest of this month, September, and going forward. But as you said, there's a lot of news coming out. There's a lot of things going on, so we expect volatility to continue. And we like volatility. It gives us an opportunity to buy at an advantageous price.
And you have some closed-end funds, 4 of them, that you think will benefit in this volatile period. They are all traded on the New York Stock Exchange. You've got 4 of them, so let's run down the list. The first one is Petroleum and Resources Corp. It's a closed-end fund, ticker symbol PEO. Tell us why you like this one.
Well, closed-end funds, we like when they trade at discounts, and these are investment companies like mutual funds, but they trade on the stock exchange. This particular one is trading at more than a 15% discount to net asset value, and it's indicated it'll pay out at least 6% of market price annually. It's got some large holdings you might recognize: ExxonMobil, Chevron, Schlumberger, and Occidental Petroleum. And we like it at the current level of 27. Our sell target is around 30. This is one of our longer-term recommendations.
Cecilia, your second choice is PIMCO Dynamic Credit Income Fund, selling at a 10% discount to its net asset value. But if interest rates are going to rise, why would I want to be in a credit income fund, dynamic or not?
Well, this one is managed by PIMCO. They have a very good reputation. The fund was structured in a way that they can invest across any type of income markets, so not necessarily only bonds. They're currently in corporate bonds and loans. Some of these loans adjust with the rates going up when interest rates rise. And, PIMCO's a great name. Most of their funds, their closed-end funds, trade at premiums. This is an unusual opportunity to buy a PIMCO fund at a 9.7% discount, and it yields 8.9%.
All right, let's look at the next 2, see if we can squeeze them in. Nuveen Dividend Advantage Municipal Income Fund. That's a mouthful. Ticker symbol NVG. Same sort of story, big discount. You can just look at the chart there and see this, big drop there. It just seems kind of risky, like Tyler was asking you, in a high interest rate environment.
This one's at a 13.5 discount. The net asset value, the underlying municipals, have been under tremendous pressure as mutual fund investors have sold. The underlying sector is oversold. The discount has widened. We think this one's ready for a short-term trade. This is an opportunity to get in at an attractive discount.
Right.
It's at 12.12. We like it there. We'd be a seller at 13.20, and we think that's going to happen over the short term.
Cecilia, thank you very much. I have to ask, though, do you or your company own any of the investments that we just mentioned?
Yes. I don't own them. The company has clients in them, and our open-end mutual fund has these positions as well.
Cecilia, thank you very much. Cecilia Gondor is Chief Investment Officer with Thomas J. Hertzfeld Advisors. And still ahead, retailers are looking for some holiday cheer in September. But with 102 days to go till Christmas, will they find it? But first, let's take a look at commodities, treasuries, and currencies today. Retail spending was higher in August, but not by much. Retail sales rose a modest 0.2% last month, far less than expected, especially for the critical back-to-school season. Smallest gain in 4 months on retail sales. Americans bought more cars, furniture, and electronics, but they held back on purchasing new clothing.
Well, after sluggish sales over the summer, those same retailers are hoping for a lot more consumer spending around the holidays. And even though it's still September, yes, September, they're getting ready now to get a piece of your Christmas shopping dollars. Courtney Reagan has more.
Teachers around the country may still be welcoming children back to new classrooms, but retailers are already wishing shoppers happy holidays, rolling out promotions including layaway, hot toy lists, and early bird shopping discounts. Kmart began its no-fee layaway program this week for purchases online or in-store through November 23rd. Walmart also kicks off its holiday layaway program today, and this year there's no fee to open the account. The world's largest retailer is also releasing its top toy picks, just as Toys R Us did on Thursday. Toys R Us is also offering cash rewards on some toy purchases through October 31st. And to bring shoppers back for holiday, those cashback earnings come in the form of e-gift cards to be redeemed in November.
Retailers are getting a lot smarter about their inventories.
Where in 2008, 2009, 2010, they ended up with way too much inventory. This year, they're protecting themselves by starting early, figuring out what the consumer wants, and doing layaway plans.
While many retailers say Christmas in September comes from consumer demand, it's hard to find shoppers to echo the sentiment.
I think it's terrible. I've always hated that. They need to wait till after Thanksgiving.
I think it's a bit too soon. Yes. I'm not thinking about the holidays just yet.
I think it's crazy.
Consumers have gotten more savvy, often diving for doorbusters early on and then waiting to take advantage of retailers' desperation and the subsequent deeper discounts the closer it gets to Christmas. At a retail conference in New York City this week, Express CEO Michael Weiss explained, quote, "We're finding the most important times of the year are getting bigger and bigger and bigger, and the unimportant times of the year are getting less and less significant." As retailers fight for foot traffic, the promotions get bigger. Good news for consumers checking off their holiday lists in September. For Nightly Business Report, I'm Courtney Reagan.
And there goes Santa. Well, finally tonight, whether you're superstitious or not, you're likely aware that today is Friday the 13th. One study estimates that U.S. businesses lose upwards of $900 million in productivity every Friday the 13th because some people refuse to conduct normal business activity or even fly on that day. You superstitious?
Very superstitious. I
you
would
really?
not fly on that date.
No, really.
No. How about
kidding.
you?
No, I'm not at all.
Okay, well, it's good. Good combination here.
Yin and
That's
yang.
Nightly Business Report for tonight. I'm Susie Garrow. For more on tonight's business stories, go to our website, nbr.com.
Have a great vacation. You'll be away for a week. I'm Tyler Matheson. Have a great weekend, everybody. We'll see you Monday.
Nightly Business Report has been brought to you by sailing through the heart of historic cities and landscapes on a river. You get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrow with a Nightly Business Report news brief. On this Friday, the 13th, investors weren't superstitious about buying stocks as the Dow wrapped up its best week since January. On Wall Street today, those blue chips rose 75 points, the Nasdaq was up 6, and the S&P added 4 points. Gold fell another $22 an ounce, posting its biggest weekly decline since the big sell-off back in June. Retail sales rose only a fraction last month as Americans bought more cars, furniture, and electronics, but held back on new clothing. Social Security has paid more than $1 billion in disability payments to people who said they were unable to work. And California lawmakers voted to raise the state's minimum wage to $10 an hour within the next 3 years, up from $8. Be sure to tune into Nightly Business Report right here on your public television station.